Sweet. We are live. I want to send a personal thank you and shout out to Wade for recording this for everybody to have access to this information later on down the road. I also want to do a screen share here as well too, just so that way we can make sure everything is okay. Give me a 111 in the chat if you're able to see this. Okay, we're good?
Yeah.
Sweet, wonderful. Okay, perfect. So first and foremost, again, I want to say thank you to each and every single one of you guys who are on here live with me. It's going to be recorded as well. Thank you to Wade for the recording, so we'll be able to get this out into the community afterwards. So big shout out to you, man. It means a lot to a lot of people. So first things first, I was going through basically the watch list of the week. I know we sent out a few trades in the chat, in the community chat here. And I also want to just do a quick review of some of the trades that we went over. And then throughout this call as well too, I only have about 11 pairs. Should take not more than 10 minutes. From there, we can go into some basic backtesting techniques and any other question and answers so that people on the recording can, of course, extract as much value as they possibly can as well too. So we'll start from the top of the list with AUD/USD. Let's see. Just want to go down the list here. Okay, yeah. So AUD/USD was called out for a 4-hour pattern, and as you can see here, what had happened was we saw a bit of a break to the downside to the floor. So a bit of a breach. So we got a break but no retest. So this is how on a cellular device you'd be able to adapt to this on the TradingView app. So you'll just basically grab your zone and you can move it down to the bottom of that wick. And then this stuff you could obviously get out of the way. This is basically just adapting to what the market did. The market simply just broke that floor, but it never became a ceiling, but it did create a new floor, simply put. Now, what we'd be waiting for is, of course, for price to either retest, and this is where we could look on the lower time frames, like 15-minute, 5-minute, or 30-minute, so that way we can see where the entries would be. Or the other thing that we want to happen is, of course, price to break that newfound floor because of this break. And we want price to break that and go back into the zone for another retest. And that's confirmation for the entry for AUD/USD. But as of right now, we just have a break. If we do go on a 15-minute time frame, we can actually look to see that there was an entry, possible entry. 1, 2, 3, 4 candles ago. So basically an hour ago, price came up, broke through, closed above, and then came back into the zone. You would, if you did take the entry, that's already 10 to 15 pips in profit. So you'd have a 2-pip stop profit secured on this one. And you would still have a 30-pip take profit on one order. And you do not have a take profit on the other order if you're twin trading. So that's pretty much AUD/USD. Does anyone have any questions on this one? Yeah, I'm not able to see the chat while I'm sharing the screen too. So if you want, you could just unmute your mic if you have any other questions about the specifics. If not, we can go ahead and move on to the next one. But I'm basically going to be doing like an update image. Cool. Awesome. So AUD/USD is in there. Next was CADJPY, so the Canadian dollar to the Japanese yen. This one we drew up, it was sent out, and all price did was still stay stuck in between this floor and this ceiling. So no real action here. We're still being patient on this one. So that's CAD JPY. Any questions on that? Okay, awesome. Euro odd was the next one.
About
The
CAD
euro.
JPY.
What's that?
I wanted to ask something on CAD JPY. Actually, I can see another zone right in the middle. Do you agree with that?
Absolutely. I see what you're saying. Yeah. We could potentially move it down here like this, because he would be right. This is the most recent level of a ceiling. But because this was called out on the scanner, we want to use that more high probability zone, which would be this top one here. But it's either or. You know what you could do is you could even mark up both and have both options available. But for just demonstration purposes, we'll leave it as is. But yeah, like the zone in here, actually, you know what? I'll mark up both just so that we have this as a reference point. And then also goes hand in hand with adapting to the market, so that when we see these moves happen, price obviously from this ceiling up here moves down, bounces off this floor, creates that floor, bounces up, and then stops right here, creates that new ceiling. It's basically a new ceiling that it created. So yeah, that's absolutely a valid zone. Thank you for pointing that out. Beautiful. Boom, just like that. So yeah, now we have price trapped once more. Here, I'll send this one out too.
Actually, I actually mentioned it because if you go way back to the market, that's a very valid resistance and support.
Right, so it's been previously respected prior to this moment right now.
Time.
Yeah, awesome. Yeah, we can even look at that too. So let's say we even go on the 4 hour. After we just drew up these three zones, we can go back and look. And yeah, look at look at this. How perfect is this? Boom, boom. So it's been heavily respected here, 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 here. So many times before previously. And this is on the 4 hour time frame, just so I'm able to see the bigger picture. But back on the 1 hour, this is how the markup would look. And I sent this into the chat as well, so you guys will have this. Any other questions on CAD JPY? Sweet. Moving on, we'll go to Euro odd. So for the euro to the Australian dollar, this was also sent out in the chats. And what we ended up seeing from this currency pair is a bit of a break. And honestly, it looks like there was a retest on the 15-minute. Let's see. So yeah, if you look, a lot of people might get confused and say, yeah, like, look, it broke, closed below, went back into the zone, this green candle, and then the red, that little tiny doji candle right there, that little tiny one, and then this red bullish candle right here. This could have been your confirmation for a sell position based off of the break in the retest strategy. However, what ended up happening was either your stop loss got hit, and that's fine, nothing wrong with that, because you're only risking 3% if you're following the rules, which says only use a 30 pip stop loss no matter what. So on a $1,000 account, that would be basically a $30 loss. But again, to go back to everything, all the professional traders, especially Chris Derrick, Christopher Terry, they never talk about money. They never talk about how much dollars and cents the trades make, generate, or decrease. They'll only speak of percents. So you're losing 3%. 3% out of 100% is 3%. It's still tiny. So that's why the parameters are in place to not only protect your account, but to just protect your mindset, so that you're not going crazy when you take these trades. You're like, oh my goodness, this trade is if I lose this trade, I'm going to be done. I'm going to be out like a third of my account. And that's not the way we want to look at this. We want to have stress-free trading, emotionless trading, so that it's fun and so that you can actually enjoy it And so that, especially for where this company is headed, I Am Mastery Academy, to impact billions of people's lives, we need to bring this to the masses so that way they can see how cool and how awesome this is to even just have this on their phone screen. It's just becoming so much more mainstream nowadays as we see technology progressing forward. And of course, given the situation that we're all, in globally right now too, you can see that most people are sitting at home anyways, watching Netflix, watching House of Cards, whatever it may be. It's like, why not develop yourself into a skill set that could potentially save your life? Now, I don't want to make any income claims on here. This is all dependent on how much work you put in, how much time and effort you put in. But for the technical aspect, it looks easy and looks fun. And I have 2 young children that I'm actually implementing this into their lives as well too, which is super powerful. And until you try it yourself, you just can't, it's amazing. It's absolutely amazing. I'm blessed and grateful to even be on something like this, be able to share this information as well too. So what ended up happening was we saw a break for Euro odd. We saw a break, a potential retest. If you're able to take this, it looks like you may have secured 10 to 15 pips. So you would have got a 2-pip stop profit in there if you did take it, which is fine. And then we ended up moving back up here. It looks like we did a break, but no solid retest because of the choppiness up here. So I wouldn't technically count that as a retest. However, if you did take this trade up here, again, you would have caught 22 pips potential. You would have had the 2-pip stop profit in place, and it would have been hit. Now, what we can do from that point is basically readjust our zones. And like I was talking about before, basically just move your zones to up here now because we created new ceilings and floors. Or if you left them the way that they were, we can now see currently as we speak on the 15-minute time frame, we have something called a break and then a retest in this green candle. If we go down to, let's say, the 5-minute, you'll be able to see this much more clearly. This is trading in a nutshell right here, folks. We see this. These red candles means it's going down. Green candles means it's going up into the blue zone. This line right here means it went into the zone. And then that was basically your confirmation to enter the trade. Now, again, if you entered in this area, you would have had your 10 to 15 pips. So you would have had that 2-pip stop profit in place, as the rules say, right? Every 10 to 15 pips, you set a 2-pip stop profit. So what that basically means, let's say you took a short position here. And for example, here, I'll do this, 30 pips, stop loss, 30 pips, take profit. What ended up happening after it goes 10 to 15 pips, you basically take your stop loss, you eliminate it, and then you put it 2 pips below your entry because it was a sell position. And now this is a risk-free trade. So the situation should be this. You have 2 orders on Euro Australian dollar. First order has a 30 pip take profit, which looks like it just got hit. So you should be out of that trade. It should take you out with your 30 pips. And then the second order, you have a 2-pip stop profit on and no take profit. So it's able to run free. It's able to let it run and basically continue downwards. And one of 2 things will happen. You'll either get your stop profit hit and you'll get 2 pips on the second order, or the trade will keep running and keep running and keep running and go, somewhere like way down here. Which again, if we look, the potential this has somewhere around 200 pips. Now, it's never guaranteed because, again, we don't know what the market's actually going to do. But this just goes to show and showcase how you can utilize the 5, the 15, and the 30-minute time frame to look at these entries. Is that clear? Is that clear on Euro odd? Does everybody get that?
Sorry, Will, I got a question on this one. Didn't you take your entries off the candle closure? Can you hear me?
Yeah, I can hear you. Yeah, that's a good question. If you want, you can totally take your entries off the candle closure. I know people that take it in the middle of the candle closure, like in the middle of the candle printing, because if you think about it, the 15-minute candle has 3 5-minute candles within that candle, if that makes sense. So if you look at the 15-minute candle, this green candle right here,
Yeah.
in that candle has 3 5-minute candles. So then we go down to the 5-minute, and you can actually see in detail what that 15-minute candle did. So it's these 3 candles, 1, 2, 3,
Yeah.
equals 1 15-minute candle.
Yeah.
So if you see if you see this 3rd candle close and you see it create this red candle, that would be an entry as well too. I know some people could take entries from there and just move your entry somewhere like that. That's totally okay too. The whole point of your entry is you want to confirm that this is now a ceiling. And if you look in the past, it was a floor, it was respected, and now we see that price broke the floor, closed underneath, came back into it, and then dropped. This is exactly what the lines are supposed to be illustrating, right? This huge line here is the break. This line represents the retest, and then in this yellow circle is where the entry would happen. It doesn't say where, it's just a yellow circle. It's over top of the zone. What does that mean? It means that it could be after the candle closes, it could be after the 5-minute candle closes, it could be in the middle of the 15-minute candle while it's still going, it could be on the 30-minute candle, when it closes, or whatever it is, whatever works for you. But the whole main point is you've got to be waiting for a break of support, okay? Waiting for a retest. This is what a retest means, where price closes below the previous level of support, which is exactly what we just saw. We saw price close below and then retest in there and go back into the zone and make its move to the downside. So anywhere on this downward movement could have been potentially your entry. It's just all up to your disciplines, and if you're setting alarms on every 15 minutes, 30 minutes, as soon as you see these candles break your zones, however much you're monitoring your trade will determine your entry, because and it's all based on brokers as well too. So John may have a specific broker, while Alex over here has a specific broker, and their numbers are a little different, so their entries may be a little different. So again, it's all personal. But for to answer your question, yeah, like you could use whatever candle you want to enter. It's totally your choice.
All right. Thank you.
Hope that helped. Sweet. So the next one, here, I actually want to send this in there too, so we can have visual representation of where your entry would have been. Cool. Next one was euro to the Canadian dollar, which I will send. I will send in the chat as well too. This company is limitless, which allows us to be as well. Wow, powerful words. Powerful words. Okay, so let's go. Euro CAD. Find it in the watch list here. Change this to 1 hour. Sweet. So again, for this one, as it was sent out into the chat, we can see a lot of indecision. So we could see a break, a retest, 10 to 15 pips, 2 pip stop profit was hit. We could see a break, a retest, and it looks like stop loss was hit. Or let's see, if we measure from here. Yeah, you might have had stop loss hit here if you were taking an entry there. But currently as well too, we see a break and a retest, and that looks like it's 10 to 15 pips from here. Yeah. So 3 potential entries, 3 potential trades. Again, the whole main point of why this was called out on the scanner was for a buy position. It's for a long position. And if, as you can see, I sent this out when it was already broken above. So this red candle back into the zone, and then this green candle would have been your confirmation. So that was an entry right there. It looks like you would have made your 30 pips take profit, and then it looks like the huge red candle would have take you out. And then again, you can adapt, but it's totally your choice what you want to do. You can keep the zones the way that they were, because as you can see now, it was respected. It broke above, and it came back into this zone. It tapped off, it wicked off the edge of this zone. And then always people will ask, hey, it tapped off the edge of the zone. It didn't specifically go into the zone. It didn't go into the blue box. Is that still a valid entry? Absolutely, 100%. The reason why is because it's all about vicinity. I know I've talked about this before. The reason why we draw these zones on the 1 hour from wick to body of the candle is so that we have a vicinity of price reaction from where that was previously. So it just gives us more confirmation of where these candles could be going in the future. Everything's up in the air after the markets are open, because it's unpredictable. And as we've seen before, trades can go good, trades can go even better, right? It's all a learning process, and we're never going to know until we actually take our positions, learn our lessons, and flex our disciplines. So if that makes sense, I'm going to just update this. You can see potential. For this one, we go even on a lower time frame, you'll be able to see this in much more detail as well. So that's for EuroCAD. That was called out on the 1 hour for this harmonic scanner. Okay. Any questions on that one so far? All right, Euro GBP. This one was sent out in the chat, I think quite a while ago. Where was it? Yeah, right here. Euro GBP on the 1 hour time frame. So this is what it looked like. And then now if we look, price actually ended up doing a huge shift. And this is even on the 15-minute time frame. Let's go even lower. 5. Crazy. This is pretty neat, because now we can showcase, all right, well, price on the 5-minute time frame did a huge momentum candle, closed below. But then check this out. I want to showcase this too. We can actually draw this up on the 5-minute from this wick to this body of the candle. And what do you know? As long as you don't give up on these trades, and you're, again, continually adapting to what the market does, you're just responding to how the market reacts, you can actually see, you can actually see price do a break and a retest on this lower move that it did. So price, once it was a floor, it broke the floor, but did not actually come all the way back up to the ceiling, like to create a new ceiling. But what ended up happening was it created a floor here, which made the zone, and then it kept going lower, broke that newfound floor, and then came back into it up here as a newfound ceiling. That's your confirmation. Let's say, yeah, for example, you took the trade. Let's say you even took the trade in the middle. You would have had like 4.6 pips of drawdown. So your account goes negative 4.6 pips, but then you have the potential of 78 for that whole entire move to the downside. So that's just another way for you to adapt to win these trades don't actually break the floor and become a ceiling. Maybe it just broke a different new floor. So this is just another way for you to learn how to adapt and look at these markets in a different way, in a different light. As of right now, on the 1 hour, you can see this is where I would trap price at this current moment. This wick, body of the candle, wick to the body of the candle. Boom. This would be our new zone that we would be looking for break and retest of. Again, if you did enter, and if you are learning how to enter on lower time frames, just keep practicing. And if you don't feel totally confident, that's okay. Imagine Christopher Terry not feeling fully confident when he first started trading. Imagine Christopher Derrick learning price trap from Chris Terry and being like, man, this is crazy. How do I know I'm right? Well, there's something called a demo account. Has anybody used a demo account before? I hope you all have. And if you haven't, that's okay. You can begin a demo account with however much you'd like. It's always recommended that you use similar amounts that you would go live with real money, so that it gets you used to the discipline of treating that account, even if it's demo, as if it were real. But again, it's all depending on your capital and your equity in your own account. Nobody can tell you what to do with your money, which is the beautiful thing about this, because you have full control. It's not I Am Mastery Academy telling you to do this and to do this. It's simply education and access to information that could potentially change your situation as a trader, as a human being moving forward. So, which I think is super, super powerful. So we'll just mark this up real quick. Anybody have any questions on this one so far? Is that making sense? I hope this is all making sense.
Quick question, actually.
Yeah, what's up? Shoot. Let's hear it.
I remember on the one go live with Chris, he actually said he used the 4 hour for some sort of confluence. What's your thoughts on that?
He uses what, sorry?
The 4 hour time frame.
100%. For example, like if your harmonic scan is called out on the 4 hour, I would start at that time frame. I would start there at the 4 hours. So I think, what was it? It was definitely Euro GBP for sure. And then the next one that was called out for the 4 hour was GBP USD, which I'll definitely go over. It was called out on the 4 hour, and we can begin to see it's just a bigger, you're basically taking a capture, you're capturing a moment in time through candles. And you can manipulate these candles to show more information or less information, hence the bigger time frames and the smaller time frames. So like you see all these drawings on the screen right now. If I were to go to the 4 hour, they get smaller. If I were to go to a daily, they get tiny. You can't even see them anymore. They look all weird and wonky because they're just showing more information but less detail as you zoom out on the bigger picture. And the bigger picture is this. We see price in a huge, huge downtrend, right? From this top all the way down, this is already 300 pips. We're almost 400 pips that we're moving to the downward direction. Now this is, again, if you look on the daily, it's a huge area right here of support, huge area of support, which is probably why the Euro GBP was called out on the 1 hour and the 4 hour for a buy. But again, that's just my opinion. I could be wrong. This is why we trap price. This is why we wait for a break and a retest. And this is why we